AI isn't just a buzzword anymore. It's printing billions in revenue. And the companies riding this wave are turning ordinary investors into serious winners. Today, I'm breaking down the 10 best AI stocks to buy in 2026. Stay till the end, because number 4 might genuinely surprise you. Here's the big picture. Artificial intelligence is already reshaping industries and driving real revenue growth. We're not talking about someday maybe technology. From chips and cloud infrastructure to software and automation, AI is becoming a core competitive advantage for the companies that are doing it right. So let's go through the list. Number 1. Nvidia, ticker NVDA. Look, if AI is a gold rush, Nvidia is selling the shovels, and it's the only place to buy them. Its GPUs are the industry standard for training and running large language models. Once known mainly for gaming chips, Nvidia now powers data centers all over the world. How explosive has growth been? Full-year revenue hit $130.5 billion in 2024. That's up 114% year over year, and it's still growing. They're currently rolling out the Blackwell platform, with the next-gen Rubin platform expected in the second half of 2026. And here's the thing. Demand is still outstripping supply. They can't make these chips fast enough. Beyond data centers, Nvidia is also moving into autonomous vehicles and robotics. The core business alone makes this a must-watch stock.
Number 2, Alphabet. That's Google's parent company, ticker GOOGL. Alphabet has been investing in AI for over a decade. They acquired DeepMind back in 2014. Today, their Gemini AI models power everything from Google Search to YouTube to Google Cloud. Some people worried generative AI would kill Google Search. Hasn't happened. Advertising revenue is still growing. They also own Waymo, which is running fully driverless ride-hailing in multiple US cities right now. And get this, Alphabet is planning to spend $175 to $185 billion on AI infrastructure in 2026 alone. That's a serious commitment.
Number 3. Microsoft, ticker MSFT. Microsoft's partnership with OpenAI has put them at the center of the AI conversation. They started investing in OpenAI back in 2019 and now hold a significant stake. AI is embedded across their entire ecosystem: Azure, Microsoft 365 Copilot, GitHub, Edge. Here's a stat that stood out to me. Over 65% of Fortune 500 companies are already using Azure OpenAI. That's massive enterprise adoption. CEO Satya Nadella has called AI the next major computing platform, and Microsoft is investing like they believe it. Number 4, and this is the one I mentioned at the top, CoreWeave, ticker CRWV. You might not have heard of this one. CoreWeave is basically the closest thing to a pure-play AI infrastructure stock you can buy right now. Their entire cloud platform was built specifically for AI workloads. Clients include Nvidia, OpenAI, Microsoft, and Meta. Revenue went from near zero in 2022 to $1.9 billion in 2024, and analysts expect over $10 billion in 2026. That's jaw-dropping growth. Now, fair warning, there is risk here. Microsoft alone accounted for 62% of their revenue in 2024, and they carry heavy debt. But if AI infrastructure keeps booming, CoreWeave is extremely well positioned. High upside, higher risk. Keep that in mind.
Number 5, Meta Platforms, ticker Meta. Meta doesn't run a cloud, but it's going all in on AI. Meta AI is embedded across Facebook, Instagram, and WhatsApp, and it hit 1 billion monthly active users in 2025. That's a billion people using their AI product. AI is also supercharging their ad targeting, which is core to their business model. They're developing open-source llama models, now in their 4th generation, and they're putting AI into hardware like Ray-Ban smart glasses and Quest headsets.
Number 6. Adobe, ticker ADBE. Adobe has done something smart. They integrated AI into tools that creatives already love, rather than trying to replace them. Their Firefly generative AI tools have been used to generate over 18 billion images since launch. They're also moving into agentic AI for marketing and operations teams. Growth has slowed a bit compared to earlier years, but Adobe is a dominant player in creative software and very well positioned for the AI era in enterprise.
Number 7. Alibaba, ticker BABA. This one's the international wildcard. Alibaba has broad AI exposure through cloud computing, e-commerce, and logistics. Their QN family of large language models is powering a rebuilt AI-focused cloud platform, and they've committed to spending over $50 billion on AI infrastructure. They also trade at a discount compared to many US peers. Consumer demand in China has been uneven, but if you believe in Alibaba's competitive position in its home market, this could be an undervalued AI play. Number 8. Amazon, ticker AMZN. Amazon was a little late to the generative AI party, they'll admit that. But they still have the largest cloud infrastructure in the world with AWS, and that's a massive competitive advantage. Amazon Bedrock gives AWS customers access to foundation models on demand. They're also pushing AI into Alexa Plus and their Amazon Seller Assistant tool for marketplace sellers. Don't sleep on Amazon. They tend to catch up fast.
Number 9. Palantir, ticker PLTR. Palantir has become one of the standout winners of the AI era. Their artificial intelligence platform, AIP, launched in 2023, and it has been a game changer. It helps government agencies and businesses search through and analyze massive amounts of data much faster than before. The results? Strong growth from both government contracts and commercial businesses. And Palantir has very little direct competition. AIP has actually widened the gap between them and any would-be challengers. And number 10, Oracle, ticker ORCL. Oracle is traditionally known for database software, but they've pivoted hard into AI. Their cloud infrastructure division is growing rapidly on AI demand, and they're spending aggressively. Capital expenditures are expected to hit $50 billion for the fiscal year ending May 2026. Oh, and they have a $300 billion deal to supply computing power to OpenAI. That's not a small announcement. That signals Oracle is building out serious AI data center capacity. Now, before you run and buy all 10 of these, here's what to think about. First, look for durable advantages. Nvidia dominates GPU supply for data centers. That's a real moat. Not every company on this list has that same level of protection. Second, understand the business model. Chip companies, infrastructure companies, software companies, they all carry different risks and rewards. Know what you're buying. Third, assess actual AI exposure. Nvidia and CoreWeave are essentially pure-play AI bets. Meta makes almost all of its money from advertising. AI enhances it, but doesn't drive it. That distinction matters. Bottom line, AI is already generating real revenue for the companies building and deploying it at scale. The strongest opportunities in 2026 are in the companies doing this right. A long-term mindset and some diversification across a few of these leaders can help you balance growth potential with risk. If you found this helpful, drop a like. It genuinely helps the channel grow. And subscribe if you want more breakdowns like this. I'll see you in the next one.